So in tonight's webinar, we're going to take a look at how to simplify the club treasurer's job. The idea is that the club treasurer has an important role, has a lot of duties on a monthly and a semi-regular and a year-end basis. And so it's in the club's interest to keep that treasurer's job as simple and straightforward as possible. The simpler you can make the job, the easier it is to do, and the less likelihood that the investment club accounting will encounter some errors, some typos when you're entering transactions, some missed digits or misplaced decimals. And so the simpler you can make it, the fewer things that can go wrong. So we really try to encourage treasurers in investment clubs to adopt principles and practices that support this particular goal. First of all, if you are new to the task of being an investment club treasurer, we don't want you to be intimidated by the job. Many people shy away from being the club treasurer. It does require some work in handling some numbers, but a lot of math is not necessarily required. The software does the heavy lifting. There's plenty of help available from ICLUBcentral for more complex transactions along the way. Our club accounting advisor, Russell Malley, helps hundreds of club treasurers each year during the year and as well as during tax season with complex transactions. Our team, including Sean Polrang, put together a frequently asked questions module to help club treasurers and members find help that they need without contacting our support based on your schedule. So we have a lot of resources, and we really have put an effort into our myiclub.com software to make tasks easier and to avoid errors as much as possible. So we've added some wizards for getting ready for a club meeting and preparing after the club meeting, the tasks that you need to do. We've got member withdrawal scenario calculator that helps you figure out the best way to withdraw members to the advantage of both the members and the remaining club members. And we have the integrated e-filing for IRS and the various state filing modules that make the tax season as easy and inexpensive as possible. So we continue to make some other changes. I'll talk about some of the things that we've done to help keep things as simple and straightforward as possible as we go along. Secondly, I want to remind you all that you should stick to your club operating agreement. If your club operating agreement says that the club shall do certain things or the treasurer shall handle a transaction in a certain way, you do not have the wherewithal to go against those operating agreements, whether it's the partnership agreement or the bylaws. So do not deviate from those procedures. Now, those documents can be changed. The typical format is that clubs have a partnership agreement, and this is something that's set up once and changed infrequently. And so it is very broad. It may say that the club may stipulate that it will collect a certain amount of capital from each member each month, and then the bylaws may stipulate the amount of the member deposits that must be made each month by each member. And that way, when you need to change things, you can change the bylaws. When you change the partnership agreement, every member needs to sign that new partnership agreement, and your financial institutions may require an updated partnership agreement. So we try to keep that as straightforward as possible, but that's the logic behind why there's a partnership agreement and a bylaws handled as separate documents. So if you come across something tonight that seems to make sense to you, you can report it back to your club and make those necessary changes along the way after discussion. One of the easy things that you don't have to worry about anymore is entering the cost per share when you make a buy transaction. It used to be that people would try to make their purchase of security transactions match the brokerage statement when they entered them in the club's books. And so there are three relevant figures, numbers that you'll be are reported when you buy a stock. For instance, the total cost, or how much you spent, the number of shares, the commission is deducted from, or is included in your total cost. So when you purchase the securities, and so the total cost and the number of shares are what's important. The cost per share is a calculated value. So the problem is that the way that financial institutions round figures, it makes things may differ from one to the other, how many decimals they go out, if they round in your favor or in their favor. We've actually recently taken care of this by not allowing you to enter the cost per share when you're entering purchase transactions. You just enter the total cost and the number of shares, and we generate the calculated cost per share. Now this, we had to put a little note on the page that this may differ from what the broker reports. Again, depending on how they're rounding, it may be different, but it's really inconsequential. It's a derived figure. What's really important is that the number of shares is accurate and the total cost that you paid to purchase that transaction. So as you're going through My iClub, if you added an earlier transaction, you may find that it works somewhat differently. For any new transactions, this is the way that we handle it. We don't even allow you to enter the cost per share anymore. This is a problem because the rounding would sometimes end up adjusting the cash balance in your account. It wouldn't match your broker, and if you tried to go back and fix things, you still couldn't get things to match up. And if you made the wrong choice about which values to use, then your books would be off in perpetuity. So try to stick to this and don't worry about cost per share if it differs from what your broker reports. Late fees are somewhat archaic in our viewpoint. We've come around the last decade on the iClub side of the business, looking at late fees as being unnecessary. The intention of a late fee for a member who's making a late member deposit, their contribution to the club, they miss a meeting. The intention of the late fee is to encourage participation, but in my experience, it doesn't encourage participation. It's merely a profit center for members who show up, and it sort of rewards attendance, but it doesn't necessarily encourage people who are actively participating. And everyone is going to have a club meeting that they're going to miss at a certain point. There are clubs that have done who have adopted practices such as having the members in January write 12 post-dated checks to the investment club, and those get put into 12 envelopes, and every month the treasurer simply deposits the checks for that particular month. So nobody ever is late in that situation. Now there could be, if you change banks, then there's a problem. If you don't forget and don't have an appropriate balance in your checking account, that's a problem. But it's in some ways it accomplishes a goal, but in other ways it simply makes the treasurer's job more difficult, because now you've got in a club of 12 people, you've got 144 checks that have to be managed and kept in a secure place for the rest of the year. So it's a workaround. Other clubs move to online payments, and that works great in many cases as well, and that's something we'll talk about later. But if you think about the trend of the club valuation, the club is always over time going to be getting bigger and bigger and bigger, maybe not on a month-to-month basis. Maybe there will be a bear market in which the valuations do not go up, but the members who are actively in the club and putting money in are going to reap the benefits. Members who skip meetings or skip payments are going to miss out. So I think that in the interest of keeping your treasurer around, let's not make the treasurer have to be the bill collector going after members for late payments, members who don't pay their dues. If a member doesn't pay their dues, ultimately they're only hurting themselves. So we recommend eliminating late fees. That's just one less thing for the treasurer to make. And certainly you can have a policy that if a member stops showing up or stops contributing to the club, that they can be terminated. There's nothing wrong with that. But draining their account because of late fees doesn't seem to be very practical to me. Next up, if you do use the member fee transaction type, it's really only to be used in penalty situations, such as when a member bounces a check, and so they've got to make restitution for the charges the club has faced. Member fees should never, ever be used to cover expenses. So if you have a partnership and you are collecting $100 a year to go towards Better Investing membership and other expenses, we recommend you just enter that as a regular member deposit, not as a member fee. Go ahead and buy units with it. At the end of the day, it's all going to come out in the wash, and so everyone's contributing at the same amount in the same month. They're buying the same number of units, and so you don't have to worry about somebody getting more benefit from the amount that they're putting in because of the timing or something like that. So, and you can get into some weird situations if you are using member fees to cover expenses and you're allocating them in certain ways. You can end up really taking advantage of newer members of your club. It's just not very fair. So we recommend staying away from member fees as much as possible. Again, it just keeps keeps things a little easier for the treasurer. And think about it, you can run through the math and you realize, well, the money that you're collecting for the a sort of annual dues payment to cover expenses, whether you entered it as fees or whether you enter it as payments that purchase units, at the end of the day, it's an inconsequential difference that doesn't make up for the additional complications that it provides for the treasurer. We also suggest that you have only use one valuation per month and one at year end. I've heard of people who create additional valuations so that they can reconcile their broker statement. So they create the valuation on the same day as the broker statement. And the problem is that if you forget to delete those valuations and you enter transactions, they can actually be using values that are not in accordance with your operating agreement. Your operating agreement typically will say that the club values its portfolio once a month. And so you don't want to have people taking advantage of dips during the month. You want everyone to be on an equal footing as of the specified date. And so if you are in one of those clubs, a lot of club members have decided they want to reconcile to their their brokerage account. So I would suggest moving the club meeting and have it be earlier in the month so that the broker's statement is at month end is current and matches the club's valuation report. At the end of the day, again, it's just something that can make the job a little easier, but reconciling in a typical investment club is not that difficult. You just need to match the number of shares. If the value is different for the securities, that's going to happen. Match the amount of cash and the number of shares of each stock. That's all you really need to do to reconcile your books to your brokerage account. So that makes a whole lot more sense. You will have an additional valuation at year end to accommodate the tax reporting and closing out the books at the end of the year. But that's all you really need. And so when you go to my iClub on the home page, you can see in the accounting page, you can see the current temporary valuation, the current valuation. It's not a saved valuation, but the value of all of the security prices for the club's portfolio is there. The At my iClub, we have a tool that's the member withdrawal scenario calculator, because paying out a withdrawing member can be very complicated depending on if it's a full or a partial withdrawal, depending on whether the club has cash or wants to raise cash or wants to pay out the member in um, in um, um, stock. The member withdrawal scenario calculator will help you to figure it out, and it's a pretty easy to understand report. It's pretty detailed as well. It describes and ranks the withdrawal methods in plain English, and will even suggest securities that you might take a look at to sell or to transfer based on what makes the most sense if you're incurring capital gains, short-term, long-term, or if you're generating capital losses. So there are all sorts of permutations. At the end of the day, there's some kinds of withdrawals that you really shouldn't be paid out in stock. You should be selling stocks to raise cash, and other withdrawals are best paid out in cash. Other withdrawals are great for transferring appreciated securities. So that tool is just been, I think, really useful for a lot of clubs. You can, the minute someone says they want to withdraw, at the next meeting, the treasurer can generate that report, distribute it to the club members, and everyone can take a look, and then you can make the best informed decision that will benefit both that withdrawing member and the remaining members of the club. It's important to keep your accounting current and up-to-date and error-free. In a unit valuation, in a unit value accounting system, such as used in the My iClub tool, any erroneous transaction can affect dozens or even hundreds of future transactions. So, you transpose a couple of digits and your balances are going to be off for every valuation for the next, until it gets fixed. And so the problem often is that once you notice things are out of balance, if you don't tackle it right away, if you let it compound, then you got to go back in time. And we have the guidelines for how to find errors in the past. And really, it is tedious. You've got to go through every transaction, every in your books, check every number until you find that error, working your way backwards. And so that can be exceptionally tedious. If it's a recent problem, if you know that the problem started happening this past April, well, then you've got only a couple of months here: April, May, June, July, August. So less than 5 months of transactions to go through to find the error. If you wait until next April, you've got a whole year's worth of transactions. If you wait until December, you've got 50% more transactions to go through from August till December. So it's important to keep on top of things. So we do suggest that every month you make sure that the cash balances and the number of shares match your financial institutions, and that you take the time when you get that brokerage report to make sure that all of your transactions are in order. And this is part of the transparency of My iClub, is that people can take a look, other members can do a report, generate a report of transactions and figure it out. And I've had cases where members have looked at things and said, that doesn't look right. I missed last month, or I put in extra last month, and I don't see it reflected on the member status report. Hey, that's a great opportunity. They caught the error, it was switched with another member, the amounts had been swapped over, so it was an easy fix. Because the member took a look and took the time to make sure that things look good. So that's something that you can encourage your members to take a look at those reports, and that's what they're intended to do, to help you to make sure that everything is accurate. My next tip to keep things simple is somewhat controversial. I've had some pushback on it, but I suggested that clubs don't use dividend reinvestment in their investment club portfolio. Dividend reinvestment 20, 30 years ago was a great way for clubs to build up shares of stock by buying direct through the company's dividend reinvestment plan. Better Investing had a program that would help you get started in 100, 150 different companies by getting you the first shares that you needed to enroll in those plans. And so over the long term, there can be a benefit to investing regularly in a dividend reinvestment plan. My view is that the benefit is if you're investing regularly in the dividend reinvestment plan, the simple fact of reinvesting dividends to purchase additional shares, whether it's in a traditional DRIP or direct stock purchase plan or a synthetic DRIP at a brokerage firm, doesn't generate enough of a return to compensate for the massive headaches that that occur when you sell the shares in the dividend reinvestment plan and have to account for them on your tax return. It's unique to investment club accounting. So if you imagine that you've got a stock in a DRIP plan, then you hold it for 10 years and you have reinvested all the quarterly dividends. Now there are at least 40 different transactions that each have their own tax basis. When you sell those securities, some of the securities will be sold at short-term rates, the ones held less than a year, the lots held less than a year. Some will be taxed at long-term rates, assuming you have gains on all of these. You may have losses on some of the purchases, but each lot has to be reconciled separately. The DRIP plan may give you an accounting that wraps it all up, so then you've got to do the reconciliation as to the average basis included in the lots that they have aggregated in the 1099. So at the end of the day, this is a lot of additional work that you're going to have to do as a treasurer to accommodate them, not only when you're doing the dividend reinvestment. It's pretty straightforward to enter in my iClub. There's a dividend reinvestment transaction. So instead of entering the dividend and then entering the purchase, you can enter it in one swoop. But it really is a cash dividend that's received and a security purchase at the end of the day. And so it gets accounted for in that way behind the scenes. So again, now you've got additional dividends and purchases that have to be managed over time. So from my perspective, this is a hardship on the treasurer, and I have not seen any data that the simple act of dividend reinvestment for an investment club for the typical amounts that are being invested in are going to contribute meaningfully to the club's returns to justify this sort of agony that the treasurer is going to have when the club disbands or when the club decides to sell that particular stock in the dividend reinvestment program. So that's why I suggest not using dividend reinvestments. Steve points out rightly that the cash dividends, the dividends that you receive, are taxable each year as cash income into the club, and so that does get accounted for every year. But that would happen whether you were using dividend reinvestments or simply had the dividends. So it's not like reinvesting the dividend. There's sometimes people are under the wrong impression that when they reinvest the dividends, that they are actually not paying taxes on those dividends, and that is absolutely not the case. One of the things that we recommend is not to enter the transactions on December 31st. And so we like to have that last day of the year clear for the annual allocation of income and expenses transaction, where the program will allocate to every member their share of gains and losses throughout the year. And so when you put any other transaction on December 31st, depending on when you run, if you come back later and add something after you've allocated the income and expenses, that becomes an issue, can become a problem. And so our rule of thumb is nothing else on a transaction date. Marion asked about member withdrawals, and as well, member withdrawals, we allow one per day when you're doing the stock withdrawals. And so you can enter more than that for cash withdrawals. But again, it gets a little sticky if you've got multiple transactions and withdrawals on the same date. So again, withdrawals should be on their own day. That way it's free and clear, and there's no question. The computer won't get confused about which one takes precedent. Are you meaning to process the withdrawal first, or are you meaning to process the transaction first? So that's why we make those recommendations. If you do have any transactions on December 31st, just date them as of December 30th. It makes no difference. That date doesn't get reported to the IRS or anywhere else. It still gets aggregated in the transactions for the year. So it's just a way to keep things neat at year end. Want to make sure that you file your IRS and state tax returns on time each year. We provide tax return modules for the 14 states that, 14 largest states, almost largest states that require investment club and investment partnerships to file state returns. There are another dozen or so states that are too small for us, but that also require, and then there are a bunch of states that don't require filing, which is a nice thing for those people. But the IRS requires filing from all investment clubs, and there are no exemptions. People who requested exemptions in the past, if they were following Better Investing's guidance, Better Investing rescinded that guidance about 15 or 20 years ago. I hear occasionally of clubs who are still under the impression that they are exempt from filing because of that requested exemption many years ago, and that is not the case. So they were likely get off without too much penalty at the end of the day, but the recommendation is that you don't try to skip the IRS filing for your investment club. The recent changes in tax law and the way that brokers are reporting capital gains and dividends and other income really makes it much easier for the IRS to identify entities that aren't filing returns that they think should be filing returns. And so you're taking a big risk if you do that. At tax time, try to be as efficient as possible. The federal returns now are due March 15th for the last few years. Many states are due March 15th, not all of them, but 1099s aren't required to be delivered until February 15th. So really that gives you a month after you get your 1099s. You really shouldn't file any IRS form return before you get your 1099. So if they do arrive in January, that might be fine, but brokers typically are not delivering them until the middle of February. That gives you a month to kind of finalize things. You can be efficient. There are some things that you can do to make sure that you've got everything taken care of. We have our Closing the Books year-end webinar and procedures that we will present in December. So that gives you a series of steps that you can do to make sure that at the end of the year you're wrapping up everything accurately. As you get those year-end statements and 1099s, collect them all in one place. I know I tend to print out my personal ones and put them in a folder so that as they keep arriving, as I get email notices that they're available, I've got them all there and ready for my personal tax return. Clubs should be doing the same. Once you've got your year-end statements, if you don't have the 1099s, the year-end statements and the club accounting's books, your records will have the transactions that you can actually do a test run of the iClub Club Tax Printer. As soon as you get that appropriate information, go ahead and run the tax printer. You will not actually have to submit anything, but you can print it out, you can review, and your entry, your inputs will be saved so that once you get the 1099s and you validate, yep, this amount looks right, this amount looks good, okay, you can step through that tax printer one more time and be done with it. Especially if you keep things simple and straightforward. So that's, you should plan for sometime in the end of January to be spending some time to kind of make sure that you've got the club tax printer working appropriately, that you don't have any questions. We do suggest that you don't wait until February 14th to try to file generate your club tax return for the first time. As we get close to that February 15th deadline, our support team gets really busy. And so we don't want you to be in that position where you're desperate for help, but our phone lines are pretty busy. The last few years, we've been much more efficient about it, and our hold times generally don't tend to be too lengthy. But the Monday morning support calls and the email inquiries that come on the online support tickets that get filed get worked through for several hours every Monday morning. There's a lot for the team to go through. So my recommendation is plan on trying to nail things down as early as you can, so that especially if you haven't done it before, especially if you have concerns, do a test run, do as many test runs as you want after you've purchased the club tax printer, and then be ready to go when you've got all of the final information available to you. I want to talk about a little bit of the some portfolio tips for clubs and for treasurers, just to streamline that aspect of it. We recommend on an ongoing basis avoiding certain problem securities. These securities may be appropriate for individuals, but for investment clubs, they can create headaches for treasurers, and treasurers don't need any more headaches. So the list includes master limited partnerships, royalty trusts, commodities, real estate investment trusts, REITs, and publicly traded partnerships. Often these partnerships won't be delivering K1s to your partnership until February 15th, which is the deadline for you to be filing. That means your partnership, your investment club, may have to file for extensions from federal and state filing, so that you've got those K1s that you're going to need to generate your club's tax return. Now, often they're pretty efficient and they get them out early, but there's no guarantee of that, and they don't have to. By law, they're governed by the same tax code as your partnership. There's some changes if they're publicly traded, but the deadline is still the same, February 15th. So that can be a problem. There can additionally be some hand-generated entries and manual calculations that you will have to make. So you probably won't be able to e-file if you use these particular securities. Real estate investment trusts are great securities for individual investors, and I do highly recommend them. But for investment clubs, they just make the treasurer doesn't just enter 4 quarterly dividends, which are really distributions. Those distributions could have 4 different types of income or capital gains in them. And so at year end, you've got to go back and reconcile those 4 quarterly distributions. And so you might end up with 16 total entries to handle those. And if they're significant, they can really throw off any member who withdrew during the year, because they won't have gotten their fair share of the income and expenses or the capital gains that were distributed from the REIT. Again, this is just how REITs operate. So it's great for individuals. You can just sum it all up on your personal tax return. But for an investment partnership where things are fluid and members' capital counts vary from month to month, it gets a little more complicated. So our suggestion is avoid these problem securities, anything that's not a common stock. So that is the bottom line. Common stocks work great for investing partnerships and educational efforts. And that focus on individual stocks comes from, one, it's stocks operate in a particular way, they report in a particular way. Our software is built to accommodate common stock purchases, common stock portfolios. Once you start adding ETFs and mutual funds, there is a problem that arises with the diversification of your portfolio. For instance, you might say, well, let's get a broad market ETF, and we'll just hold that as a place to park cash or as a core to our portfolio. Well, the S&P 500 is really a large cap stock fund. It's primarily, it's market cap weighted, so it is dominated by the largest companies. So any other large company stocks in your portfolio are going to be added to that and give you a large cap exposure that might be much more than will be desirable if you wish to outperform the broader market. So diversification gets complicated, and the club's educational focus, really says, let's take a look and tackle sometimes some of these difficult industries or sectors where it's harder to analyze companies like financial stocks or bank stocks. There are some different ways of looking at those particular companies and analyzing them, but your club is an educational endeavor, so you might as well go ahead and tackle those. And the same thing with small caps. I know that some people would rather just hold a small cap ETF and avoid buying individual small company stocks, but if you're trying to improve your members' financial acumen, then maybe analyzing and purchasing some small cap stocks would be one way to improve not only the diversification of your portfolio, but just the education of each of the partners. Any stock that is less than 3% of your club's portfolio is doing nothing for your club's returns. If that stock doubles overnight, that's 100% gain for the stock, but it's a 3% gain for your overall portfolio. And that's just way too small. So we suggest getting rid of the stock or adding to it. Often these might be shares that you received in a spin-off, for instance, and so in your mind you think of them as free stocks. However, there is a cost basis that was transferred from the parent company, so they're not really free. There is a cost to them, and then the other thing to consider is that, yes, so you've got $50 of stock and you're going to sell it for $10 or $15 in commission. That's a big chunk. It's worth it because the $50 in your portfolio is not working for the club's gain. It's distracting when you look at it each month, and it's just one more little thing for the treasurer to worry about, to have to take care of. So suggest getting rid of small positions in your portfolio. And likewise, if you have a limit of 20 stocks, which is a great target, 15 to 20 stocks, and probably closer to 20 is a great upper limit for most investment clubs because it gives you the maximum, the optimal levels of risk and reward. If you add stocks beyond 20, you don't reduce the risk of an equity portfolio very considerably, but you do decrease the rate of return. And so, in other words, the more stocks you own, the more your club's returns will tend to be similar to a broad market index fund like an S&P 500 index fund. And we want to outperform the market, so we want to concentrate in fewer stocks. So if you set a limit of 20 stocks, then if something great comes over the transom and the members are excited about it, they've got to get rid of a loser in the portfolio, or they've got to get rid of something that's got limited potential upside and replace that stock. And that process over time will improve every aspect of the portfolio metrics, the return, the diversification, the risk level in that portfolio. Too few stocks are very risky. If you think about it, a portfolio of 2 stocks is very risky because all the risk is concentrated into equities. But too many stocks is equally bad. If you've got 50 stocks in a portfolio, and this is personally as well as in an investment club, you're really just likely not doing any better than the overall market. This is one of the reasons why large cap mutual funds tend to underperform. after, because they've got one, they've got expenses, and two, they're owning the same stocks as they get bigger and bigger. They're owning the same stocks as everybody else. So there's very few large cap mutual funds that don't own Apple and Google and Facebook, and the list goes on and on and on. They may own them in different percentages, but there's no really way for them to get an edge on the overall market. So I suggest that your club keeps that down as well. I don't want you to focus on performance in your investment club to such a degree that every month members are coming in and expecting to see an upside and a gain since the last meeting. That's not going to happen. But over time, you do want to make sure that you're on the right track. So we have at my iClub the benchmark and performance report that is important because it compares your returns to what you would have done if you had invested money at the same rate into an ETF or an index fund like the S&P 500. And so this gives you a good, we call it a benchmark because you're benchmarking your club against something very tangible. And over time, hopefully you will have a slightly better return. Maybe you'll have a slightly worse return, but you'll say, but that's okay because our members are really learning something here. That's a really inexpensive way to learn something. But it's important. You can't make that kind of decision one way or the other unless you are using a benchmark, simply adding up, here's how much we had at the beginning of the year, here's how much we put in, here's how much we had at the end of the year. Very simplistic calculation, but it doesn't account for the cash flow in and out of the portfolio. That is how much members put in at what point during the year. And so the benchmark will capture all of those cash flows. If you're a new club, I suggest staying away from this report simply because your startup costs tend to be much larger as a percentage of the club portfolio than it will be 5 years, 10 years down the road. Your annual operating costs are going to be a small portion of the portfolio. At the beginning, you're always going to be in the red unless you're very, very lucky. So there's going to be some learning curve as well that's going to contribute as you figure things out. That's going to improve your returns over time. So that's my only caveat. So I like, again, year-end makes a convenient time at the January meeting. Take a look. Here is our report on the calendar year. Again, is there anything special about a calendar year? Not really. Companies report on a calendar year, and they report on a quarterly basis. Another way to look at it would be, here's how we performed since the beginning of the present bull market compared to the broader market. How if you put all this money, instead of putting it in the club each month, if you put the money into an index fund, how would you have compared? And so that's another way of looking at it with the custom dates and the benchmark and portfolio report. You can really set up that comparison as well. So, but again, this is the standard. People want to look at year end, and so I think that can be useful to see how you're doing against the broader market. And now we're going to talk just a little bit about some operation related issues, not necessarily investment club accounting related issues, but that also affect the treasurer's job. And I want all club treasurers to stop printing valuation reports, member status reports, transaction reports, and bringing them to club meetings, making copies. My iClub lets any member print a report at any point in time. So members can view, download, save, or print their own. If they want to save it onto their tablet and bring their tablet, the club could go entirely paper-free. The My iClub site also on each report page has an email function, so the treasurer can go to that report and say, okay, I generated the valuation, so here's the valuation report. Check it out before the meeting, bring your own copy, because remember, I'm not going to print it for you. So reduces paper and gets everyone used to using the tools on the website, which will be helpful when one day some of them might become club treasurers. So learning to navigate a little could be to everyone's advantage. Likewise, to go paperless with your financial statement accounting, get those bank and brokerage statement accounts delivered electronically. You can store those PDFs, which they typically are, in the club's file storage area, so every member will have access to them, can view them, and that can be a good transparency objective that the club can work, as well as reducing paperwork and as well as preventing the hard copy from getting lost or becoming inaccessible if something happens to the treasurer and the files are, in a particular place, or maybe there's a fire or a flood. There are all sorts of situations where having e-versions of these account statements can be quite valuable. A little more complicated, the members can use electronic payments. So this is what a lot of clubs have figured out, that members can use ACH or electronic funds transfer or online bill pay, whatever it works, to send their monthly member deposit right to the club's bank or brokerage statement. And so the method that's commonly used for when this happens is that each member gets a different penny amount. So one is 3 cents, then the next one is 4 cents, 5 cents, that they add to their member payments that they're making. And that way the treasurer knows that when a transaction for $50.05 comes in, that's a particular member. $50.18, that's a different member. And so you up to 99 members, and you can recycle them as members withdraw, can be accommodated with that method. The downside is that some members might be contributing as much as 98 cents more than another member in that method. But most clubs are pretty good with that. And if that member is concerned that some other member is putting in an additional 98 cents, then they can add another $1 to theirs, and now they've contributed more. So there are plenty of workarounds, and the advantage is the club treasurer just goes onto the website of their bank or broker, sees the transactions there, and is able to enter them according to the amounts into the software or download them. So it can work out. So that's easier than having to collect checks and take them to the bank and sign the backs, endorse them for deposit, fill out a deposit slip. So this is one way that is getting easier and easier, these types of electronic payments. So you might need to investigate what your bank and broker can accommodate and what your members can do. Backups should be done regularly. One of the biggest problems that we run into are clubs who've had problems, lost their data, and now they want magically somehow for everything to be made right again. If you've got a backup file, that's easy. That can be restored and take you back to as of the date of the backup file. But if there's no good backup available, then you're stuck going back in time, entering transactions. We suggest making periodic redundant copies and storing them in different secure locations. So again, we don't want to scatter your club backup file around so much, but on the other hand, you do want to have them available on a fairly regular basis. So we do have some treasurers who will download the backup file each month from their My iClub website and then email it to themselves. Maybe they'll do it every other month or something like that using Gmail. And that way, they just file it in their received mail at Gmail, or maybe they create a separate folder for it, and it's always there in their account. So they can, at some point, if they need it, they can go back and just search and find that email they sent themselves with that backup file. Other people will put it on a zip drive, flash drive, and put it in their safety deposit box or their fire safe at home, or take it to their office and put it in a desk, put it in an envelope and put it in their desk drawer. And so it's a good idea to have a couple of different backups. We do, on My iClub, we do manage a redundant server array so that the database is effectively kept in sync between a couple of different versions. So if there's a hardware failure, a power failure or something, we do have access. We do run backups as well, but we are unable. That works if we restore the entire server, all several thousand clubs worth of data. It doesn't work for your club who has messed things up and you deleted all your files accidentally, you don't have a backup, and now you want us to restore it. That's not something that we can do. So we have something called the backup manager that you can go to in the utility section, and you can, as of that point in time, make a backup of your club file. Now, we don't suggest you have to do this every month. You can do it once a quarter. We will back it up for you every 90 days so that you've got access. We figure, well, for 3 months, you can restore the last 3 months. That's fresh information. It's should be easily accessible. We use the backup manager as well when you've got a difficult transaction to enter and you're not sure how it's going to work. We suggest go to the backup manager, make a backup, and then do your transaction. If it doesn't work, just go to the backup manager and restore. It's like you're time traveling back to before you even started messing around with that transaction, and then you can try it again. So that backup manager is something to get used to, and you should be keeping that. If you're using Club Accounting 3, no doubt you've got to do manual backups. Use that backup function and save that data. Don't save it on the same computer. Having a backup on the same computer that your Club Accounting 3 software is installed on is not a backup, because if your hard drive crashes or you've got a fire or flood in your home, then you're out of luck. So we don't suggest doing that. We suggest that every year-end, you do a club audit. Have a committee of club members who meet and review the books, and will provide you with that audit form that you can utilize there. This is just great. Experienced club treasurers welcome the audit. They want the members to know what they're doing. They want the members to have confidence in the treasurer, and they want to know if something has not been entered correctly. So that is something that's really key to keeping your books accurate. So we do suggest that you do that every year. If you're a lot of clubs have annual elections. We suggest that you don't have annual elections in January or February, because you'll be changing treasurers when the new treasurer would be expected to be preparing the club tax returns for a period for which they weren't the treasurer. So they have no experience with everything that happened in the last year. The old treasurer may be happy to get out of that task, but it's not really fair to the new treasurer. The new treasurer might help out with that process, but we suggest timing it a little bit differently. In my clubs in the past, we've done this in the summer. We've had a late summer election annual meeting, picnic, barbecue, and that seems to work well as a social atmosphere and a good time going into the end of the year with new officers. So that treasurer would at least have a couple of months of treasurer duty before they were required to prepare the club's tax return. So finally, if you don't know, ask. We've got the Better Investing does operate a club treasurers list email list. We have the Stock Central Clubhouse forum. The FAQ at iClub.com has all sorts of information. That's where you get your details on how to enter a company merger or buyout or spin-off. We'll have the details there usually a week or two after it's been completed. So we do want you to take the opportunity to seek help when you need it, and our team does a great job of responding to it. So questions real quick. So Marion says, does iClub have a benchmark report? How's this comparison done? Yes, on my iClub. So I'll flip over to my iClub in the report section. If you scroll down, we have in the portfolio reports, we have the club performance report. So when you select that, so this is a fake club, but It shows you the year-to-date typically. So this is this club year-to-date. Its portfolio is up 36%. The broader market is up only 14%. Lifetime, however, this club is trailing the market a little bit with a 5% return compared to a 7.9 or 8.1% return. So you can look at it at different periods over time, and you can reset the starting period here as you want to, and you can select different indexes as well: small, large, bond, high yield, corporate, emerging market. So there are a bunch of different indexes. So you can see, well, if we were in the bond market, how would our stock portfolio be performing? You can see not necessarily in the yellow. Year to date, that treasury bond portfolio has been performing much better. Now, again, these are not just raw averages. This takes in the member contributions that have been put in. So it's great to print that out and share that effort there. Bobby says, I realize a member who bounced a check in 2018 was recorded as a club expense versus a member fee. Should I be concerned? No, I wouldn't go back in 2018 at this point in time and change it. So I would leave that transaction. It's already, what's done is done at this point, but best practices are best put into place going forward, and keep that in mind. Steve asks if the backup is encrypted, the files backed up. Yes, the file storage, that's a good question, because in the file storage area, we have what we call the takeout feature, download all files. So this, we do back up the files on the server, but again, they can't be restored for an individual club. So we have this feature here which allows you to download all the files in a single zip file. So not every member has access to this, but I'm sorry, that could be wrong. I think all members do have access to download all the files in that zip file. It has folders and all of the documents that are, and other files that are there. And so that is the documents in the file storage area are stored in the database, so they're not stored as open files on the server. And the tax files that are here are actually not, so when you click on, in this case, 2018 federal taxes, you can see in the lower left of my screen, it downloaded a PDF file. It actually regenerated the club's 2018 federal tax return. It's not actually a PDF that sits on the server. And again, that's just a security issue. Hackers can't access the data. They can access the database, but they can't actually generate the files, because that's the programmatic aspects are separated. So those files, that would be a good additional step to back up by downloading all those files, maybe once a year, to do that and see how it goes. All right, well, thank you all. I'm glad you were able to join us. We'll look forward to seeing many of you on Thursday night at our Better Investing Club Treasurers webinar. If not, remember, we're off until Tuesday, October 15th. So we'll look forward to seeing you there at our next Investment Club Operations webinar.